It's Monday. It's been an interesting weekend where things were pumping like mad and a little bit curtailed. We'll analyze what happens for Bitcoin over the best days of the week. Before we jump into all the stories today, we're going to be talking about everything. A lot of Bitcoin, sovereign puts, alts, rotations, a little bit of AI towards the end. But before we do, let's make sure everybody is good in the hood. Mando, all good with you?
All good in the hood. Yeah, it's been a great last few weeks, so I'm very happy.
And a hot summer. CTO,
Boiling.
How are you? Nighttime where you are?
All good here in Vietnam. There is enormous activity here outside.
And it's probably 11 o'clock at night, isn't it?
Something like it's something like that, 9:30.
Oh, I thought it was much later. Okay. So, yeah, I was always worried about you staying up late. Now I'm not worried anymore. Marty, how are you? New microphone.
I'm great. I'm great, guys. Predicted 125. Nearly got there, right? 120.
122.
What do we hit? 122?
122, yeah.
Okay, a little bit more.
Yeah. Well, let's get into the story. We've got a lot to cover, as usual. We try and gauge what people are really interested in, and we will be talking about the hottest new thing, and that's called kind of pre-IPO stocks, but on-chain, and tokenized stocks, and risks involved with that too. So I won't dig into the agenda. We'll just go through it fast. First of all, the big news, the crypto market cap hits $4 trillion. That's a big landmark. My bull case way back in 2023 was hopefully 3, maybe 5 in a stretch, and we're halfway there. Mando, 4 trillion is quite significant, isn't it?
Yeah, that's a big figure. I think most people think that we could head kind of, well, you have a range, but let's say when people talk about this cycle or this next like 18 months, people are hoping that we can get maybe just above 5, maybe very, very bullish people think something like close to 10. It feels like it's been a very, very good period here. Like Bitcoin hit all-time high, then you've seen a bit of rotation, and a lot of different bits of the market are starting to feel strong right now. So yeah, I think we're at a very strong point. It would really just be, in my opinion, like a black swan, which took us out from here.
Yeah. CTO, what do you think of 4 trillion? Crypto market cap.
I mean, it is incredible. I mean, with little bit perspective, I mean, some years ago, we dreamed about this, right? And now it's here. I mean, gold is, 22 trillion, 23 trillion today. The biggest stocks on the planet is 4 trillion something, and crypto is the same. It seemed like a crazy field not so many years ago, but here we are.
NVIDIA market cap is actually higher than the crypto market cap, just for perspective. One company is bigger than all of crypto, including Bitcoin, which is stunning to think about. Marty, 4 trillion on your bingo card? Marty froze.
Yeah, the numbers are 22.8 is gold, and then NVIDIA is 4.4. So crypto is you're right, just below NVIDIA. Yeah, I mean, it's insane, right? It's the third largest asset by market cap in the world, and we're now going towards our nemesis, which is gold. We hit 36 ounces per Bitcoin last night at 121. So at 125, we should approach that 40 ounces of gold per Bitcoin, which I think is real interesting, and that's to me is the true price of Bitcoin.
Yeah, there's a good one. There's a cool IQ test where you can put in people's Twitter handle into IQ. You should see the score for Peter Schiff, everybody. We'll share the link later. It's hilarious. Anyway, let's talk about the weekend action. And it's so funny because we always talk about the DCA pump. But if we analyze the last 3 months of history, you can see here, these are the best days for action. Of course, as market makers analyze this, they'll discover how to manipulate it more. But over the past 3 months, Sunday has been the best day for upward moves on Bitcoin. We always talk about the Sunday pump, but then Monday, sometimes things pump during the show. And Monday has been the second best on average. So there's a good chance we won't see big things happening on Tuesday this week, unless this time is different. In terms of this daily seasonality, what do you guys reckon? I'll give it to you, Mando, first. Do you believe in these seasonalities? We know the weekend pump is always good for crypto, and maybe it's because nothing else is trading and everybody YOLO's into crypto. Any explanation?
I've seen this a lot, though, recently, right? Like, it's like dangerous headline comes out on a Friday, often around geopolitics. Crypto's the only market open. We know we're the only risk market open on Fridays and Saturday, like after close on Friday or on Saturday. Market absolutely tanks, and then by Sunday it's all resolved. Or when the equity markets open, futures markets open on Sunday evening, suddenly we pump back. I think this is very standard for crypto, if I'm honest. Like I see this a lot, particularly around geopolitical events.
Yeah, interesting take. And I think speaking of that, the futures markets, Bitcoin open interest pretty much at all-time high again. And it's interesting that orange piece at the bottom is now Hyperliquid, which has been growing steadily. And then you got Deribit and all the other big players. But again, the derivative market doesn't feel frothy. Futures open interest has ticked up over the past couple of days, but still very, very stable. So it's like we talked about before. It's like a steady Eddy accumulation phase for all things Bitcoin. Marty, any interest in open interest? Excuse the pun.
Yeah, I mean, in my opinion, we've got the problem of the CME closing over the weekend, and they're aggressively trying to stay open over 24 hours in order to stop the gap. I mean, but the problem right now is every Friday, like Mando says, the CME stopped at 117,200 on Friday, and now we've got a massive gap to 119 again. So we've got a $2,000 gap we have to go and fill. This keeps happening over and over again over the weekend, and until they run at 24 hours, we're going to have those gaps. Just understand the gap is, a hole in their order book on their futures that, they want to go flush, just like Binance flushes their high leverage positions. The CME want to go and flush theirs. So it came down just under 120, and then looks like it bounced. So they haven't got anywhere near the gap, but the gap probably will attempt to get filled over the week.
Yeah, and then the proxies all across the board are doing very well today as well. Michael Saylor nibbled on a little bit. It's a very small buy, but still a couple of hundred Bitcoin. But let's talk about this, and then we'll look at the chart, if that's okay with you, CTO. This is James Check from Check on Chain. I've had him on the channel before. He is very good on-chain TA guy, Octa guy, and he's normally very based, and he has been quite bearish in 2025. He just came out with these targets, which I call it moon math time. And I'd love your perspective, especially CTO, with your charts and projections. Let's go to the 176K, because 165 to 175 is the M2, global M2 tracker. That would land us somewhere there, if possible. Then we see a level 134 to 142. That's kind of like your, Marty, your 125 plus. And then 147 to 153 starts getting warm with only 10% of days being higher. And then 240K is moon math territory. We may not get there, but it's possible. This is pretty bullish stuff from James Check. CTO, let's go to you.
Yeah, so absolutely. Let's look at both the short-term and the long-term situation. So as you guys remember from last Monday, it's just a week ago, but people were quite worried here last Monday. And I pointed out that that was actually just a retest of this inverse head and shoulders. I come back to it later when we talk about targets. And we did bounce very nicely. And if we look at, if we zoom in a little bit, I also pointed out this last Monday that we actually had a perfect retest on the dollar of this level, 112,000. It did bounce very nicely up from there. So this is a very bullish situation we have here, guys. As I said, with some people were quite concerned last Sunday and last Monday, but look here, guys, it held, and the trend has not. The trend is rock solid here, and now we have this level reclaimed, 117,300. So it looks great, guys. And then, of course, so that's the situation. We're still very bullish here. And okay, now we have some price action backing up. People start calling a top again and so on. I don't think so. This is looking great from every possible angle. And then,
CTO, quick question on the girth of the trend. I always look at the girth of the trend, and that basically means constant accumulation. And what you see with the wicks down, they're market manipulation. Do you believe in that?
Oh, I mean, there's an enormous amount of manipulation here going on all the time. And everyone who thinks that because institutions are coming in, there's not going to be any more manipulation, I think is wrong. These are the professional manipulators, guys. So I continue to think that we will continue to have manipulation. Marty always talk about the Wyckoff model, and that's a great model to kind of uncover this type of manipulation, where price is intentionally manipulated to scare you, scare people out of position, liquidate them, then run it in the other direction. And I think we will continue to see that. I don't think it's going anywhere. So then the next question is, how high can we go? And I think no one can say for sure. We have different models. We can look at parabola, slope, for example. If we zoom out here, we can see that, you know, it's been pretty straight. So then it's more a question of how long will we sustain this until the parabola breaks. And of course, if we sustain it into next year, we can, you know, get higher. There's also,
hate to be a pest. Can you map that parabola layers to some of these targets? I'll go to the 176 to the 186. Yep. I can't quite see it there. How high do we get?
So if this slope remains constant, you can see here it's been pretty straight line from when is it? November 2022. Then it's been pretty straight line. So if you said 176, right? That would be, if we extend this line a little bit, we see we get there, if this remains straight like this, in spring next year. But of course, it can also accelerate, right? The parabola can get steeper and steeper in something that starts looking more like this, into a blow-off top. That can also happen. So the other perspective is the targets. Like if we look at the classical charting, we have multiple of these inverse head and shoulders. And if we take the more recent one that I showed a while ago, we can use target-based models to say that the height of the inverse head and shoulder can be the target from the breakout. Then we also get to 168 in this case. So that's probably what he did there. So those levels are definitely possible. But there's a big but here. In my experience, the targets-based models have always been completely blown out of the water, meaning that on the upside, the actual price overshoots the targets massively. And same thing on the downside. Like it hits the downside targets, but then it goes further and further and further and further. So that's been my experience with crypto, that it's, I mean, selling at target has been quite losing strategy. Because many times prices continue another 50%, another 100%, another 200%, another 1,000%, another 10,000% if it's small altcoins, beyond the targets. So I think it's possible to get much further. I still think so. I made some simulation earlier. I think it's possible. It's definite. 300,000 is not unreasonable, and I think that these targets can be overshot this time as well. So that's my take.
Awesome stuff. Let's get back to the story right now. This is, again, super, super bullish. But one other thing that did happen too is Grok. So love it or hate it, AI is now a big part of our lives. And this is from the Bitcoin conference. Grok now predicts $400,000 by November 2nd, 2025, which I think is completely ridiculous. Marty, do you give any credence to AI and their targets?
Yeah, I've seen a lot of this lately. A lot of people posting Grok results for all kinds of things, like what is the best blockchain? I mean, things like that. You can't argue with data and facts. Remember, this is sort of a town hall. It's crowdsourced data. So this is the aggregated maximum opinion of all people on Earth. So it's just the way it is. You can correlate it very close to people's emotions. I mean, going back to those predictions there, just flip back one slide.
Yep.
Before we carry on.
Yeah.
If you go look at global liquidity, like if you take BLX and map it to global liquidity, you'll see we've been tracing global liquidity almost identically since 2024. If you look at all the global liquidity issued by foreign countries outside the USA, lagged 84 days, takes us to 140,000. So I think his first target is 100% going to happen. It'll be 125, then 140 based on global liquidity. And the US hasn't begun printing. So when they start cutting rates and printing money in the US, I think that propels us to the 160, then the 180, then the 250. So I think his numbers are exactly right based on global liquidity. Yeah.
Okay, that's hopium hit of the day right there. Bang, hit us in the head.
It's not really hopium in a way. It's it's the printing of new money, new debt. Yeah. So, and Bitcoin is following it. So in one way it's good, in one way it's bad. Right? It's inflation, but assets inflate. So if you're an asset holder, you love it. So yeah, it's weird. It's one of those two things. You either in or you're out at this point.
And thank you for that, Marty. And to circle back to Mando, something you said yesterday and something CTO just said today. You expected last week on DCA that the bull market would extend into 2026. CTO's target extends into 2026. And the impact of the money printing that's coming, more money printing, and rate cuts could extend us further too. And we know that the impact of the tariffs has actually been very positive. What's your take? Is this froth or is this realistic?
To be clear, I've been saying that I don't think we're in the 4-year cycle sort of stuff. So I find it difficult to predict cycles. What I do think is the correlation with global liquidity is there and has been there for a while now. And interestingly, we've been lagging actually. Like Bitcoin's been lagging for a little bit for at least the last 6 weeks. It should be up closer to 130 to 150K. Now, what you have seen is the crypto total market cap has continued to go higher because ETH's risen during that period. But if that correlation is to hold, then yeah, we could have a pretty bullish Q3 here for Bitcoin still, and potentially even into Q4. In terms of the macro picture, I don't see much which is gonna push us off course at this stage. Like, we are still in a very restrictive monetary environment across the board. Rates are very, very high in multiple different countries, and you have high amounts of even quantitative tightening still going on in certain places. So that's got to shift. We've still got a lot of movement to shift that back into more money printing, which is going to be needed because these debts are just completely unsustainable for all these different countries. So you can get very, very bullish on the back of that. Whether we see something break over the course of that is kind of the thing that could derail us. Like, maybe you see on a sovereign level, one of these countries breaks, or maybe you see an asset bubble break, US housing, maybe something in Japan, this sort of stuff. And maybe that's what takes us slower. But right now, you can paint a pretty rosy picture for crypto in the medium term from a macro perspective and just an adoption perspective.
Excellent. We just have a little bit of breaking news as well. For those of you who follow the Bitcoin miners, like me, they just got rid of the CEO of Cleanspark, who is actually on the channel. And I think his name is Zach Bradford. And he got a step-down package of 14.4 Bitcoin. And he also sold a lot of the shares at the top. Nailed the top, that guy did. I hedged the top, but I didn't. I didn't cover the whole downdraft. Anyway, that could be good news because the other guy is very interesting, Matthew Schultz. And that's just a little bit of breaking news there. So let's get back to the story. This is, again, a long way to go, ladies and gentlemen. We got through Grok, 400K, believable. Harvard just bought, this is Harvard University, they got massive endowments in the billions of dollars. And their portfolio is pretty concentrated in technology and AI. But now, what many consider to be a top AI position, their Bitcoin bag of IBIT is now bigger than their Google position. I thought that was quite interesting. And what, Stanford started stacking, although they're not Ivy League, Stanford started stacking Bitcoin a couple of years ago. They actually let the students do an investing competition, and they let them determine how they invest, which is cool. So that's done very well for Stanford. Any thoughts on these endowment programs from universities jumping into Bitcoin?
Yeah, this is slowish money. So like this moving in kind of signals what we spoke about even the week before, which is the 401ks now being accessible for crypto. These sort of endowments, pension funds, 401ks, like these are all different things that will start to move into assets. I thought Harvard was really interesting because in 2018, I think they said it was more likely to hit $100 than
exactly, yeah,
than 100K, and now they're buying at 118K. So pretty funny that some of the top financial institutions of the world just faded this all the way up until now.
But kudos to them. You know, it's very important. One of the signs of intelligence is to be able to reverse your decisions. So Harvard, you're clever. Better late than never, as they say. That was good news. And Marty, some TA targets. You posted this yesterday. Your targets, everybody's wondering, like, you know, ETH has been pumping like mad. There's actually talk of Wintermute also manipulating the ETH price too, and Binance. Maybe you can touch on that too.
I mean, I track it every day. Binance sends ETH and Sol to Wintermute, you know, to control the charts almost identically. I mapped it out basically move by move. Today already, you can see they've sent, I just posted it earlier. Let me give you the totals. It's staggering. I mean, it's just unbelievable how much. It's 119,000 sold in the last few hours to create this dip down to, you know, to take out the leverage down to the blue lines. And 12,712 ETH, that's 55 million under leverage on the perpetual exchange, and 393 Bitcoin to create this little dip this morning. So just an incredible amount of assets moving between Binance and Wintermute constantly, Sol, ETH, and BTC to create these movements in the charts.
Yep. And what's interesting, Marty, is they didn't go after ETH until it really started to pumping. Is it true that they, you know, say that the perp traders, they see the action on ETH and then they all FOMO into it, follow it, and then Wintermute sees that as a honeypot to attack? Is that fair?
Well, it's Binance. Binance sells longs under leverage, and when an asset is particularly bullish, there's more longing. People are more bullish. They're longing off with high leverage and large positions, so they'll be more aggressive in their flushing, you know, to go and retrieve that leverage and liquidate. And so they use Wintermute. Wintermute's just the primary market maker in crypto right now. They all use it. Everyone uses it. Circle uses it. Coinbase uses it. I mean, it's a great business. Remember this. None of this is illegal. It's potentially unethical, but it's not illegal. This is just their business model. They sell, they're a casino, they sell bets and they go and retrieve the bets. Ultimately, they will pump in both directions. So they'll also manipulate to the top side to take out the shorts. So it's not just, it's not a biased approach. It just feels like it's always the longs that get liquidated just because we're in this accumulation whack-off, like CTO mentioned. When we're in the accumulation whack-off, then the pressure will be to the downside. When we turn around to distribution whack-off, which is coming shortly, I believe then they'll turn to the short side and they'll start liquidating shorts. And so it's going to, you know, the revenge is coming. And you know, Binance doesn't really care either way. They're in the business of making money, but ultimately, you know, they manipulate in both directions. So the short turn is coming. It's just a matter of time.
So, audience, if you're out there perping ETH, remember they're coming for you. And the people that have been perping Sol have had the rude awakening all this year by Wintermute and Binance and others. And now, Marty, you were the first to talk about this. Credit to you. Now everybody's talking about it. Even the ETH OGs are upset because they see what's happening. And but let's talk about your targets real quick.
Yeah, first of all, my charts, I don't draw my own lines. This is just trading views, all chart pattern AI. So this is trading view, just, you know, doing what I call retail patterns. And so, but you can see it's very accurate. There's only a few of their patterns that tend to be inaccurate. These are all very accurate. Rectangles, triangles, things like this. This is a really good estimate of long term. I mean, to get there, it might be ups and downs, but ultimately that triangle is probably going to hold. And all major alts, but what I call blue chip alts, you know, any network token that carries stable coins or has a regulated CME product I call blue chip, and they all have this very similar triangle pattern right now. It was brought down, everything was brought down there, you can see, with that falling wedge, and they're making their way sort of up top towards that target again at the top. They're all pretty much similar, but yeah, you can see the targets for Solana in the midterm.
CTO, how does this jive with your TA? I think you might be muted.
Yes, I can share the screen again.
Yeah.
And let's have a look.
Let me see. It should be popping up now. There it is.
Of course, I agree with Marty. So
there's the pattern. Yeah, there's the pattern.
The Sol to USD chart, it has had very clear resistance and a clear support. So the resistance here, which did break up one time, and then it turned into support, but then it fell back again. It's at about 187. And now we see today here, it actually rejected there again. I'm not sure you can see it. Let me zoom in. So it rejected yesterday, it rejected today. So it's really the level that is trying to punch through. You can see the rectangle here. Even though that has broken up one time, broken down one time, it has always come back to this one. So then we have a rectangle, and how to measure targets, if we talk about that, it's the height of the rectangle if this later breaks out. So that would, on the logarithmic scale, give a target of about 274, which is almost exactly what Marty just said. Right. So I agree. There's different ways to come to this. And of course, the SOL to USD chart is highly dependent on what Bitcoin does. And as we know, the SOL to BTC chart has been in this downtrend for the entire 2025. But it kind of looks like it has found the support here, which is this level here. See, every time it has dropped below, it has quickly come back, bounced, which was established already in 2023, actually. So assuming this holds, it looks like Solana could have bottomed out. And my main theory is the same. I said it earlier. A lot of people said it's different this time. There will never be any alt season and so on and so forth. But actually what we're seeing, guys, is the same thing that has happened all the previous cycles. First, Bitcoin pumps. Then after a while, the second biggest start pumping, which is still Ethereum in terms of market cap. It's a clear reversal, right? We talked about it so many times. Here's ETH to BTC. It was down, and then suddenly it starts going up again. And it was not difficult to identify. That's what we're seeing. And what usually has happened in the previous cycles is that after Ethereum stops pumping, funds move from there to even more volatile, even more speculative assets on lower market caps. And that's where the next batch of coins start pumping, and towards the end it's the micro caps and the absolute garbage that goes up the most. So that has been the cycles previously. Of course, no one knows what's happening, but I don't see anything different this time. So I think that the same thing could play out again. Eventually Ethereum starts pumping, and then probably some of that stops pumping, and then some of that money moves into Solana and other coins. That's my main scenario right now.
Yeah, it's interesting, all of that perspective. So to summarize, the alt season is intact. It just might be a little bit delayed, and it's happening just like in the previous cycles. Now, you did talk about rotation. Everything is rotation. People sometimes don't understand the most important thing in the markets is to ride the fastest horse when you can. Now, this is Samson Mao, who is a Bitcoin OG. And he is the guy that advises nation states on buying Bitcoin, like El Salvador and others. Mando, he's been kind of up in arms talking about this new great rotation between Bitcoin to ETH and then back to Bitcoin. And he's talking about this for a long time, and especially this week, he got pretty heated about it. They want to chase the ETH pump, which you nailed, by the way, with their Bitcoin bags, because a lot of ETH bag holders also own Bitcoin, pump it into ETH, wait for it to top out, and then go back to Bitcoin. Do you believe in that theory?
Yeah, I mean, I don't know if it's like how he's saying, but do I think that we're going to see a rotation back from ETH into Bitcoin? Yeah, I can see that happening. I'm thinking about doing that even myself. Like, I do feel as though the trade is becoming more and more consensus, whereas when it was in the 2000s, it was less. Now it feels as though a lot of people are getting onto this, and like you said, leverage is increasing. People are just trying to get that all-time high level in ETH, which from here is only like 10 to 15%. And just as a trader, I look at that and go like, well, I don't know if I necessarily need to be in it anywhere near as much as I was going into that all-time high. So I've been reducing from 4K to 5K of this trade. I'm obviously going to keep some, but I'm going to rotate back into Bitcoin here. Do I think that the rotation into alts is here yet? I don't know yet. That's basically where I'm at. Like, do I think that means when ETH stops pumping, that will mean all these other alts start pumping? That wasn't what happened, for example, when Bitcoin stopped pumping at certain times. I feel like this has been specifically a ETF/treasury company trade, very similar to what happened with Bitcoin, and it's now just happened to ETH. And I think we could have up here, it's become more of a consensus trade. So I'm going to be reducing it, but I'll probably be putting it back into Bitcoin and waiting to see. I think this will 100% happen to Solana, but I don't know if it's yet. Like BlackRock said that they're not going to do the ETF, or at least they're not looking at an ETF just yet. And I've still been waiting for that as like my first signal that TradFi is ready to do the same thing.
Yeah, the ETH all-time high is 4950, so it's a little more than a 10% move to get back there from 4200, if I'm not mistaken.
Yeah, so about 15. What was that? Just shy of 20, like 15. I don't know. It feels like hype moves 15%.
Yeah, 15%.
You know what I mean? Like I'm not in trades in that sort of size for 10 to 15%, and I feel like it'll have a lot of resistance at that level. So my view is this: I'm going to be reducing from there until 5K and just moving it back to Bitcoin and then reassessing what's a good trade.
Awesome. Now we had other crazy news too, and I just want to state to the audience, one of the things that good investors do is they follow the money, they follow the adoption, etc. We had a record breaker. This is a platform called Axiom. It's a trading bot, and it's the fastest ever application to reach $200 million in revenue. It hit the first $100 million in about 125, 130 days. Then it hit $202 million in 200 days. Fastest app ever to make so much money. Who knows anything about this trading bot, and should we all be using it?
I mean, I know quite a bit about it, but what it's really done is basically taken massive market share from 3 of the other names on this list, which is Photon, Bullx, and Trojan. Like, when it comes to Solana, it's about speed and UI UX, and Axiom's has done the best job of it. So they are one of the only trading bots to see massive inflows over the last month. If you're looking at what's been going on with this like Solana on-chain meta, you basically had a bit of a war over the last month or two between Lex Bonk, which is the Bonk guys platform, and Pump Fun. It feels in the last week or so Pump Fun has won that back again, but it's not necessarily been a value creating space, let's say, for the last little bit. There hasn't been a lot of onboarding. I don't know now. There's been some winners. Like there's something going on base at the moment with Zora. I don't know if you guys have been following this, but like Tokenized everything. That meta's come back. Zora has done a 15x in the last month. It's gone to $1.5 billion. And there's a lot of talk about how that whole meta could actually come to Solana and probably be done even better on Solana than it's being done on base. And you're seeing a few different like protocols trying to do similar things on Solana now. So Solana is still where a lot of the degen activity happens. Axiom seems like it's winning in terms of the trading bots, but there's all that rotates a lot. But yeah, Axiom's been a big success story on Solana.
Awesome, good stuff. Anybody have anything else to add on this one? Kind of interesting.
I mean, Axiom does. I know it does around $20 billion in trading volume in the last couple months, which is pretty insane. But then when you look at Binance, they do about 20 billion a day on their centralized exchange. So these things are great, but I mean, they've still got a long way to go. But I think overall, and including BonkBot's new offering, these bots, Telegram bots, are very, very fast. There are a lot of them now, and it's a very good way of trading. People enjoy it because they have a lot of other kind of functionality you don't get on a typical platform. You know, they have whale watching, large trade watching. There's a lot of UI to present to a trader that you don't really get in a centralized exchange, which doesn't have transparency. Because decentralized trading, you have access to all the entire blockchain, so you can see all wallets, you can, and all the activity. They've started to integrate AI tools, and it's an amazing experience, right? This is trading on a whole other level. It's like social trading. You can see what other people are doing in real time, and I think these attract people because it's a whole social aspect. It's a whole different way of trading, so it's quite enjoyable. I think that's why they're seeing accelerated rate.
Yeah,
it's just a whole new way of trading.
Yeah, CTO, as a technologist, have you ever seen such innovation at such a pace, especially when you benchmark it against what's happening in the TradFi world, which is nothing. It's the same for 30 years. But literally every month or every quarter, the space is different. Now we've got AI-driven UX, whale watching, bots, all in crypto trading. I mean, when will TradFi ever catch up, or ever?
I don't think the legacy can catch up. It's not really about the technology, but they probably have the wrong people. So I think the disruption is on, guys. The world is going to change. This is a new companies coming in, and they're moving too fast. They're too innovative, too risk-taking for any of the old world to catch up to that. I don't think so. I think it's a replacement happening, and it's if anyone has looked into how the traditional financial system works, how stocks are trading, with so many different stock exchanges. Even if you just want to get the data, you just want to have the price of the stocks. That's all you want. Closing price of stocks. That's like a maze of agreements and different platforms and systems. And it's incredible how complicated it is. And then we have crypto, and it's all on chain. You write 50 lines of code, which you don't even need to type anymore. You just ask Grok to type it, or whatever platform you like, and you get in 1 minute, and you have it. It's done. It's like, we talked about sometimes 10 times better isn't perhaps enough, even or twice as good isn't enough. But if something is 100 times better, 1,000 times better, it's 1,000 times cheaper, 1,000 times faster, 1,000 times, 10,000 times cheaper to maintain, more cohesive, open 24/7, run by software instead of 10,000 people managing old system. It's going to win. There is no scenario where that doesn't win. And that's what BlackRock realized. That's why they're talking about putting all the assets on chain. They realize that's what's going to happen in that.
I think once you tokenize, I think TradFi realized once you tokenize an asset or any tradable financial instrument, it's acceleration, it's money velocity just explodes with all the current tooling that's already been built, based on what we've seen so far. So like I always say, I think, meme coins and all of this whole experience over the last year was all just the liveness test to basically get the tooling and the ecosystems and the blockchains up to speed, iron out all the bugs. But ultimately, TradFi assets are coming. They're all going to be tokenized. They're doing pre-IPO tokenized stock now. They're doing tokenized stock. And next, the institution will start tokenizing their stocks, and you'll get IPOs on chain. And all of these trading tools, which are currently being used to trade crypto, will just automatically pigeonhole into trading stocks and IPO stocks and real world assets. And it's all being built to support that wave of new assets into this technology. And we're watching it in real time. I think it's pretty obvious what's happening.
Exactly. And it's amazing that we get to, experience this happening, isn't it?
Yeah. And you both said something that's very important. And Mando said something a while back. Two factors that drive everything. One is UX and two is speed. How important are those two factors again, Mando, especially with the 20x more compute efficient? We have Tesla adding 10x parameters to the self-driving software in September. Everything is step changing really fast. How critical is this?
This is massive. Yeah. This P token thing is massive, by the way.
Yeah. Matt, any thoughts on that?
Yeah, look, I think Solana is going to continue to be the best monolithic chain. I think it absolutely destroys everything when it comes to that. And I think it's the speed and the number of transactions and the ability to handle bots is going to be very, very strong for it. I don't think that's necessarily, as I said before, I don't think it's the only thing for token price, but if you're trying to do that, there's no one even close. And I think it is going to be important. I'm just going back to what you're saying. I think it's interesting because I think the first stage of this will be trying to get retail on chain. And I'm waiting to see if we start to see big, because I think retail trading must be about 15 to 25% of all stock trading, for example. I think institutional must be kind of 80 roughly. And I feel as though when you start to see them do all of their trading on chain, like the jobs that I used to do, if people are actually going to start doing that on chain, you see big refactoring of infra across various different Wall Street firms. That'll be the big thing. That'll be the absolutely massive thing. That you're starting to see them start to tokenize certain assets, but when they start to go, right, this is actually a better way of doing settlement. This is a better way of trading, which I think may take a little bit longer than we think it would be. Maybe that's like a 5-year aim, but when that happens, yeah, you got absurd amounts of stuff trading.
Exactly. And that takes us to, we're jumping ahead actually in the story and the agenda, but this whole real world asset tokenization of everything is huge. Back in the day, even a few months ago, last year, the year before, we all knew tokenization of everything was coming. We're seeing aggressive moves by TradFi to jump into this area. But the question is, and it goes back to UX and speed, especially speed and security for TradFi. And Mando, you know the importance of 100 milliseconds better than anybody. If you're doing $1 million trade, you can't wait 2 or 3 minutes or 15 minutes. You need to know it's filled at that moment in time and strike while the iron is hot. So let's go back to this $1 trillion question. Which chain will be tokenizing the world? Or which chains? Or will there be unique chains that fit unique, could be one chain for bond market, one chain for high frequency trading and algos, one chain for retail investors, one chain for tokenized assets that aren't really the assets itself. Who wants to tackle this one? This is a big one because this goes back to, if you know how markets work, the importance of speed is absolutely critical and there's no getting around that. Mando,
I could talk on it as well.
Yeah, I think at L2s you can get relatively fast speeds, but obviously Solana's still got has got a, I think it's going to have a better roadmap than various different L2s. What I've noticed has been interesting though has been some TradFi people prefer clearly this L2, like we own a bit of our own blockchain, we own the fees bit of
control.
It. That's something that I don't think necessarily I would have predicted a couple of years ago. I kind of felt like that would be more of a risk to them, but they actually prefer to actually have some control or ownership of the fees going through the network. So that's something. I don't know if that shifts more to like having better dApps necessarily on Solana than it does like owning the chain. But yeah, that's why Robinhood, for example, did what they did, which was, I would not have predicted that. But I do think that Solana's going to be up there with some of the fastest chains. There's obviously going to be some very, very fast EVM or L2 style chains. You got Mega ETH coming out, for example, which is going to be very, very quick. But yeah, in terms of monolithic chains, I don't think you're going to get better than Solana's roadmap.
Yeah, and then we'll go to you, Marty.
Can I just add one perhaps important insight here, that because this is not a new discussion, it's since tokens came along and new blockchains and so on, many companies, like their first thought is that we will build our private blockchain. We will build our own purpose-built, better optimized blockchain. And even before crypto, this was a very common thought, like we will build a purpose-built telecom network, or we will build a purpose-built, corporate local area network with different characteristics. What tended to happen in the end is that those initiatives didn't succeed. They were all replaced by the one global protocol instead.
Correct.
For like a complex mix of reasons. Too long to iterate, but that's what has happened so far. And I have a feeling that the same thing might happen here also. The TradFis, they might all build their own L2, each of them. They have all their own L2s. But if you fast forward a few years later, those initiatives fail and get replaced by just using the public global protocol instead. That like the global protocol tends to win in these situations. And this debate it comes back in all industries regularly, and now we have it again, and that's my bet. I think that they will build their own L2, they're gonna fail, they're gonna go back to using a public blockchain that other people maintain, other people build roadmaps on, because that wins in the end. And then based on today, Ethereum isn't capable of doing that on layer 1, so it's only Solana today that is contender for that. But it could be like that. This insight might take several years to progress.
Yeah. I mean, I always go back to the analogy, if I can talk on it. Remember, I've been in this for since computer science in college. Basically, we started at mainframes, right? Mainframes were large CPUs the size of a room, and all the users came and used time of the mainframe. And so it was one single state, one single memory, one single disk, one single CPU, and the users would come and use it. And that was where we were. And that worked really well. Okay, it worked really well. But, everybody wanted their own CPU, and the internet came along so we could move data at high speed. So everyone got their own CPU and their own disk and their own state, and that was client server, where we are now. We all have our own desktop machines connected by an internet. And that's great, but you get redundant data. Now you have different sets of data, different states, and you've got to synchronize this, a lot of fraud, a lot of inefficiency and friction. Well, because the CPUs in NVIDIA have got so fast and the internet has got so fast, we can now create the mainframe concept, but in a distributed way. So we're getting the benefits of the mainframe concept with the benefits of having distribution. And that's what blockchains are. The people tend to call them blockchains, but they're actual globally supercomputers. They're global supercomputers that are distributed cores. So they're distributed to create single point of failure. So you can't destroy them. A mainframe, you can blow up the building and everyone's doomed. But this is like they're split on all 5 continents in thousands of different CPUs, and so you can't kill them. So this is like a mainframe you can't kill. So if you start to look at blockchains like supercomputers, it's a better way of looking at them. Then you get into the compute unit, which you put up that slide. When it comes to compute units, when you use the supercomputer, you've got to pay for it. And the computing unit is basically the unit of work for using the computer. And anyone in the world can use the computer. And a smart contract, that was a word created by Ethereum, but really any program can get run on these computers. Solana and Sui don't even they don't make a differentiation of smart contract. You can write any Rust or Move code and spend some money on compute units and run it on either Solana or Sui. They're just global supercomputers available to the public. So I think that's a better way of looking at it. The Solana P Token proposal is huge because it completely radically defines how you pay for using the supercomputer. It's going to drop the fees of actually using the computer by 1,000 times. So, more people will use these supercomputers for lots of different things. So I think it's just different ways of looking at it. I think we've been educated in one way. To CTO's point, some blockchain networks aren't supercomputers. They just can't do that. They were never built to really be execution layers. They're stuck between stores of value and execution layers. And, I just don't think they'll ever really make it. I was there in the beginning, right? The internet, every corporation, when the internet came out, tried to create their own internet. Just what CTO just said. Yep. They all did. JP Morgan, Microsoft, they were like, we're going to make our own internet.
We have a little bit of breaking news here. We have a long way to go on this story, but this just popped in. And could this be the trigger for an alt season? And it's pretty clear that the U.S. administration and the president and his family are YOLOing big into all things crypto, Bitcoin, ETH, you name it. And now they're saying they're starting a new company called Alt5, which will be an altcoin treasury listed on the NASDAQ. Interesting. Wow. Mando, is this madness?
I actually think a lot of people would just do better with sort of these sort of vehicles. I've said it before. Like if we could have an S&P style vehicle, right, for the top crypto assets, maybe 5 to 10, I think people would probably just rest better at night. They don't have to deal with the rotations and just know they'll hold on to the winners a little bit more. With stocks, that's what a lot of people do, right? Like, I haven't got time to look at what's going to be better out of NVIDIA or Tesla or Meta or any of the Magnificent Seven. They just own the index and they know their winners will continue to win. I kind of feel like with this sort of stuff where you have like an altcoin 5 and it's market cap weighted, and then you have things drop out or drop in based on if they get overtaken or not. I actually think people might do even better than trying to catch the rotations, because I think that's where people lose a lot of money.
Yeah. And by the way, before I forget, links below on my video for Mando's Minutes, Marty Party on X, and CTO Larsson on X, and his website and everything else. Don't forget to follow these legends who spend their Mondays with you all sharing this killer alpha. But let's get on to the bigger story, okay? And this is causing incredible, I call it maybe retail FOMO into pre-IPO stocks. This is the next big thing. Everyone wants to buy SpaceX and XAI and Anduril and all these different types of things. Solana's now doing it all with this pre-IPO stocks. Then you've got other proxies like Neptune Digital that has SpaceX and Bitcoin, a bunch of other stuff, Solana, and then other things. But there are some things you need to understand, that when you're buying these pre-IPO stocks, you're not actually getting shares. You're getting a wrapper around potential block of shares. And in some cases, for some of the X stocks, you're just tracking price of these assets. You don't actually own the stocks. But Marty, I know you know a little bit about this. Give us 60 seconds on, are these dangerous? Should people be YOLOing into them? I think they're a little bit dangerous.
I think, it is the future. I mean, let's understand that this is the future. Tokenization of all kinds of IP will be the future. I think it all comes down to people's lack of understanding of the stock market. I mean, people don't really understand that you're not buying stocks anywhere on Robinhood. You're buying two levels of counterparty risk. A Robinhood doesn't own the stocks you're buying. The DTC owns the stocks you're buying, and it's just a piece of paper registered in a centralized computer. So you're not really buying stocks anywhere. There is no notion of a stock. The stock is all held by the DTCC, a government entity. So these are all just various versions of derivatives on top of that understanding. They're all securities, right? At the end of the day, everything that is not the real actual underlying asset is a security. It's a promise. It's an IOU. So this is just a more digital version of that IOU. It's just a better form of the derivative. So the derivative markets are exploding into tokenization, and this is just the next level. We're going to get index tracking, price tracking tokens. We're going to get pre-IPO tokens.
You can perp the pre-IPO tokens now as well, which is even more nutty.
As long as the counterparty is trusted, the sky's the limit as to what you can tokenize. You can tokenize anything.
Mando, imagine you have a follower and they're in Zimbabwe, for example, and they want a piece of SpaceX or Anduril. Would you say they could throw their $100 at one of these pre-IPO tokens?
Probably not. I mean, this is the thing. It works for the right scenario, and you know that like there's gonna be a lot of obscure scenarios where it doesn't work. Like, what if they don't IPO?
Yeah,
you don't have anything.
Just look at the Circle IPO. Robinhood has been doing pre-IPO, right? They're actually doing it on their app. They're doing bullish. We all bought. I mean, I bought Circle at $38. It went live. It's now 150. That's a great trade. So these things are extremely profitable if played correctly. So I think it's a great new tool. It's just another tool in the stack. But tokenization is the key.
Circle's 165, by the way. Circle's 165.
You get access to internet capital markets. Just so much liquidity comes. So these companies that are doing IPOs love this stuff because they now have access to global public internet markets.
But I would one risk, being risk-taking, risk-averse. There's a thing called the great taking, CTO. Do you believe there's a risk of not holding these physical share certificates? Marty said, well, Robinhood doesn't have them either. Well, technically they should, but they have them through a third party. And what happens if the government, wherever that government may be, we've seen some absolutely insane Orwellian moves happen around the world. I won't mention any countries in particular because you might get offended, but you can go, you set fire in Canada in a wood and you get 200 hours of community service. But if you walk into a wood, you get a $28,000 fine. It's just really weird stuff happening around the world. What would happen if a government goes off the rails, CTO, and seizes your so-called stocks if they are on such a platform or even on a centralized exchange?
Yeah, I see it like this. I think it's a very good question to really think through, because I think a lot of these scenarios, they're actually going to happen over our lifetime. I become more and more convinced about that. It's kind of spiraling out of control. The debts are spiraling out of control. In the US, there was we just witnessed a serious attempt to get the economy under control. It didn't work. Like, the political element of it is too difficult to solve. So the conclusion of that is that we might get hyperinflation because the only way out of the debt crisis is to print more money, and then you have more debt to manage, and it kind of spirals out of control potentially. And what will the governments do? They will try to tax the remaining assets more to get more money in. and then people will try to move out, and then they will say you can't move out, we will tax you anyway, and then this kind of explodes in some way. You know, this I think Raoul Pal has talked a lot about it and so on. So there's a lot of history on this, and it might actually happen. I think so. It will happen during our lifetime. But then, does it matter if you hold the stock certificates or just the price tracking or something? I argue it probably doesn't, because while they might not be able to seize your Bitcoin if you have them on a ledger, and they can't seize the stock certificates that you're holding outside somewhere. No, that's true, but they can seize you. They can seize the person, and they can make some rules and laws and say they have to do this, you have to do that, otherwise we will arrest you. And then it doesn't really matter how exactly you hold those certificates. So I think for practical purposes, this is kind of trying to look into the future and then back up and see what should we do today. I think that these constructions are great. They're great for trading. They're great for in every single way, except that you add some counterpart risk. So that's maybe the downside, real downside here. 100%. Otherwise, I think that these are useful and valuable, and we need to think bigger and maybe a longer discussion about how to manage this bigger risk that I think will come everyone's way.
Very, very well said. And there's another thing, because they're speaking about government here too. Sometimes it can be a little bit of a positive. But a long time ago, I said, if a government wanted to build a bag of 50,000 Bitcoin quick, they could buy Marathon at a discount. It was trading at less than the value of their Bitcoin bag, which means all their IP, all their real estate, all their rigs, all their access to energy for HPC, etc., would have been for free, which is bonkers to think. And then a lot of people now are talking about the so-called sovereign put of these treasury companies. So if the US government wanted to get their hands on $650,000 Bitcoin fast, there's no way they can go to market and buy that. The OTC desks don't even have a sixth of that. What do? They buy a bag holder, and this is called a sovereign put. A lot of people, let's just go around the table real quick. One of the things about having such a sovereign put, it puts a floor price on the asset, the stock. Mando, is this something you believe is possible?
I continue to think that the way that the US will build a Bitcoin reserve is either via these treasury vehicles, or it's that they get involved with mining. I think they're already starting to do like American mining Bitcoin. It would be very interesting to see what would happen in a MicroStrategy scenario if something went wrong. I don't think they're going to buy MicroStrategy, but I do think like the best ways for sovereigns to get involved in crypto in general, we continue to see, is that they're setting up miners or doing it that way. And I think the US has got the ability to do it very, very well, given the amount of energy they have versus the rest of the world.
Well said. Marty, what do you think about this craziness? Is it feasible?
No, I like that you brought it up. I'm hearing it also. Everyone's talking about it all the time now, potentially MicroStrategy going on the block and the government doing a sovereign put. Basically, it just means a backstop for those people listening. The sovereign put really just means the government stepping in and saying, okay, look, you're too big to fail. So, you know, under any distressful situation, we'll come in and bail you out. Just like a bank. So it's basically like the government stepping in and saying, okay, look, Bitcoin is strategically important to us, so we can't have the price drop anymore. So if the price drops below 100,000, we will buy it all. And that's pretty much, I think, the case for not only Bitcoin. I think the digital dollar is now issued as $300 billion of digital dollars issued on, you know, Solana and Ethereum. I think they're going to do the same thing. They're going to say, look, we can't have, that's now a strategic risk. That's national security. So we need to backstop and put a sovereign put on the stake of these important critical sovereign networks. So you see, I think it stretches now with the stablecoin bill to both Bitcoin as well as stablecoins. I think they're going to have to protect, quote unquote, the networks that run the digital dollar as well as we grow. We're at a third of a trillion. When we get to $1 trillion, I mean, that's a large amount of US debt on chain. So I think, yes, I think it will happen in some form or the other. How it happens, I don't know. I kind of agree with Mando. I don't think they're going to outright buy strategy, but I think they might step in and say, under distressful situations, we will infer a sovereign put and protect these asset prices from potential manipulation.
Yeah,
and I'm all for it. I think these things are absolute national security risks at this point. Like, the US needs to lock this shit down.
Yeah. CTO, are you a believer? Sovereign put?
Yeah, could absolutely happen. Yeah. And it wouldn't be like, it would be presented as a win for everyone. It's like some kind of partnership, strategic, national security, something, blah, blah.
Saylor has been smiling since November. So he knows he has a chance of this one too, which is kind of interesting. Let's get to our final story. We've got a lot more topics, but a lot of people are still very concerned about this. We've tackled it before, but it's Bitcoin-backed loans. A lot of different players out there offering loans, borrowing against your Bitcoin. A lot of people in the world are hurt right now, trying to buy their first house. They can't get a mortgage, or they can't get a mortgage at a decent rate, or they can't qualify for a mortgage. But there's a lot of homes for sale. So if you're a cash buyer, you can get a great deal. So a lot of people are now looking to Bitcoin-backed loans. But I always say, at this stage of the market, with Bitcoin so high, don't do more than, say, 25% loan to value. But a quick round the table on this final topic. Would you do it to buy a house so you wouldn't have to sell your Bitcoin? And if you were to do it, how would you do it? Would you do it on chain, decentralized, or through a centralized player like Coinbase or one of the other vendors out there? Mando, you first.
Yeah, I'd look at doing something like this. Maybe not to buy a house, but to buy. Well, it really depends on the house. Let me put it that way. I think using an asset to buy another asset is not necessarily the worst thing. That being said, like I said, I'm not like super bullish on the US housing market right now. So I don't know if you should be loading the boat on Airbnb.
Any housing market. It could be.
I like that.
And it could be anywhere in the world. I know the US market because it's in my backyard, and I see some crazy things happening.
No, I think you can do it. And in terms of where you can do it, I think it really depends on how much experience you have. We've spoken about how you can get rugged doing it in various different forms, right? You go with the dodgy lender, that could be an issue. You go on a SEX, who knows about custody? You do it yourself, you're doing it yourself, and you could muck up a transaction. So I think just do whatever you feel most comfortable with. I would personally do it with some of the biggest DEX lenders. That would make the most sense to me. But you can, Coinbase, you can do it right now, but you can get decent levels on places like Aave or some of the others.
Yeah, even Jupiter's doing it now too, and I think Meteora, if I'm not mistaken.
Yeah, correct.
Yeah, Marty, what people are asking? They need a house anywhere in the world. This doesn't have to be US. You can borrow against your Bitcoin anywhere on the planet. What would you do?
Yeah, I love Jack Mallers. I listen to his Monday podcasts on my space with the guys, and he's a big believer. His Strike product, they're pushing very hard to introduce a millennial, Gen Z focused Bitcoin backed mortgage structure. I also talked to the Figure Markets guy, Mike, and he's doing the same thing with his products. Look, at the end of the day, guys, we're looking at a major end of centralized banking, in my opinion. We lend money from banks, but the money we lend is just debt, so it's not real money. I think the whole movement we're seeing is a movement to public internet capital markets, which means if you need to loan money, you can go out to the public. That's what crypto is. And in a decentralized way, loan money from people that want to loan you money for your house. So if I was young right now, I'd be stacking Bitcoin. And like Mando says, I think the real estate market with rate cuts will probably see an inventory shock, and so a price decrease. I think a good strategy for a young person right now is stack Bitcoin and just wait for the right moment. And in that real estate correction, get a mortgage with your Bitcoin in a decentralized manner or one of these very well-trusted ways, and buy your first house. Don't do it now. Wait. I honestly believe there will be a dip all around the world. Real estate's the one asset class that never really corrected after COVID. It's still way up. It's never even seen any pullback. And that's because of the monetary policy situation with Jerome Powell. I think once they lower rates, there will be an inventory shock and there'll be an opportunity. So you can leverage your Bitcoin. I see it as a new way for young people to get in the market. I think it makes perfect sense.
Yeah.
Just be careful you do it. Don't do it with a backdoor deal. Don't do it with an unknown. If you can do it decentralized, do it that way. The loan to value is not bad, right? 75, 80%. Jupiter's doing it. Why not?
Yeah.
I mean, it's the market strategy.
Can I just add one thing? Just a thought. I mean, the way that a lot of rich people buy stuff, they don't sell their assets, right? Because that realizes the capital gains tax. Instead, they take out a loan with those assets as security and use that loaned money to buy the stuff. So that's how the world works. And that's exactly the concept here. What you have to watch out for is what happens if the asset value that you used as collateral drops. Because then whoever lent you the money, irrespective of construction, is going to come back and say that now you need to pay back some of the loan or add in more money into this. Otherwise, we're going to sell your assets. And a lot of people lost their Bitcoin like that over the years that has been. They used leverage one way or another. Price dropped. They got liquidated. They didn't have the Bitcoin anymore. Then price pumped back up. But this time they didn't have the Bitcoin. You don't get the Bitcoin back if you've been liquidated. And I think the thing to watch out for here really is that if you take the Bitcoin as collateral, take the money, and then you buy a house. If price drops on Bitcoin, you can't sell 10% of your house or 20% of their house to top up the assets, right? Because then you have to sell the whole house, or they will sell your Bitcoin. Then you don't have the Bitcoin if it pumps back up. And then, of course, the key question is how much can Bitcoin drop? Previously, in all the previous cycles, Bitcoin has dropped 80 to 85%. I don't think that will happen anymore because, as we talked about here, we have more institutional, stable investors, perhaps. But I still think we will see 50% drops. We have had almost 50% drop in gold. So, why can that not happen in Bitcoin? I think it can. So if anyone's doing this, just make sure that you have readiness what you're going to do if price drops, because it can always happen. You never know for sure. And make sure you don't end up in a situation where you then have to sell your house and lose your Bitcoin. So you have to kind of think that through.
I do believe what you say there, 50% drop, which takes us to what I call the 70K floor that we pegged in November, because the price of Bitcoin before the US election, the night before the US election, tends to be the floor. So going from 120 now down to 70K would be exactly that. So let's wrap up, everybody. This is a little stark chart. You guys hinted at age and no money and finding ways for the young people to get real estate, but this is quite profound. When people are young, it's very true though as well. When they're very young, they have no money. When they're an adult, they've got no time because they're kids and a job. When they're old, they got no energy. And then Bitcoin solves all of that across all the generations. Just when I share that with everybody, remember, time is the only thing you cannot get back. And if you're creative, you can make money, and then you can buy your time back. But do it as quickly as you can. So any final week ahead thoughts from everybody? Does this hit home with anybody in your world? CTO, what do you think? I see you smiling.
I love it. I mean, absolutely. Try to buy back your time, guys. Don't waste your life doing something that you hate. That's the worst possible equation.
Yeah. And time goes fast. Marty, any thoughts on this? Any thoughts for the week ahead?
I mean, it's lovely because whenever you hear anybody say, what is money? That's a great question to ask any intellectual. Like, what is money? I mean, money is just a store of your time and your energy, your life energy and the work you put in. That's really all it is, your production. And slowly, if you look at a chart of the purchasing power of the dollar, it's just going down to zero. So our time and energy is almost, being robbed and taken away from us, like CTO just said.
Yeah, and I want to have
hard assets. Store your production for perpetuity, and it's a great use case.
This is crazy. I know a guy. Okay, he sold one of his. He had a original house. He bought a bigger house, kept the old one, and then sold it after 2 years. He's been sitting on $600,000 for 6 years now, and I've been urging him to buy Bitcoin. 600 grand 6 years ago. Can you imagine how much Bitcoin he'd have now? He's still sitting on the cash. He's still sitting on the cash in a checking account that doesn't pay you anything on that 600 grand for 6 years. Mando, have you ever heard of such horrific stories before?
Like I told you, I'm looking forward to owning more Bitcoin this week. That's kind of my one plan for the week. I always feel nice when I'm owning more Bitcoin. It is crazy to me with the levels of inflation that we've seen over the last 5 years, how you really feel it. You really feel the change in different currencies. I think even the most in the dollar. Like it feels crazy. Base levels of salaries and costs are just soaring. 600 grand is not what it was 5 years ago.
Yeah. And Mando, by the way, if I stuck a beard on that young guy on the chart, it would look just like you. I hope you're not offended by that.
Yeah.
You're young, but you have money.
I'm moving more towards adult and old, I feel.
Yeah. Awesome. Thank you, everybody. And thank you to the moderators in the chat. Everybody, don't forget links below for everybody here for these legends. Appreciate you all for spending time with us on a Monday and getting us ready for the week ahead. And also think about life's big challenges and how to prepare. We had a lot of stuff to talk about that we didn't get to this week, AI, impact on jobs and stuff, but we will get to that next week. Don't forget to follow us. Thank you, T&D, Sean D, and everybody else. Oh, we have the Zip or glasses. Marty's getting ready to DJ our party.
I'm going to open my shades now. It's so sunny.
Awesome. All right. Have a great week, everybody.
Yeah, thanks for having us again, James. Mando, CTO, great work, great job. Every week is amazing. People love the show. It's growing. Guys, go give the X account a follow. And let's blow it up.
12,000 watching, by the way. 12,000. That's big. Yeah. Okay. Cheers, guys. Take care.
Thank you.